So one question a lot of people have when they're getting started in real estate is, will this work for me? Will it work where I live? And as we've seen with some of the market corrections in the last couple of years, it's not always easy to make a profit in real estate. I'm not one of those gurus who says, it'll work wherever you live, the only thing that's stopping you is you. The fact of the matter is there are different real estate markets across the country, and I learned that very clearly when I moved from Winston-Salem, where the average house price is about between $100,000 and $150,000, to Seattle, Washington, where single-family homes start at $300,000 and above. The crazy thing is, there's not a lot of differential in the amount that those homes would rent out for between North Carolina and Seattle. So you can see that something that cash flows nicely in Winston-Salem would have a lot of negative cash flow in Seattle. Now, when I moved here and I talked with other real estate investors and agents and I said, how do you guys get things to cash flow here? What I was told is, we don't. These folks are buying properties with up to $1,000 in negative cash flow when they were fully rented out and just hoping that they would appreciate. I had one realtor say, even though I'm losing $1,000 a month on cash flow, I'm making $2,000 a month on appreciation. So I'm really coming out ahead. Now that worked for a while, but when the market started tapering off, I'm guessing that he was not making $2,000 a month in appreciation anymore. It's really important to know what your strategy is when you get into a property to make sure that you don't get in over your head with some of these homes that now people owe more than they were worth. They have negative cash flow and they can't keep up with the payments. That's a really horrible situation to be in. I'm sure it makes those folks feel very uncomfortable, have a very hard time sleeping. So make sure you can afford to stay in the property through the market cycles. If it's a buy and hold rental type of property, plan to own it for at least 5 years. And if you're in a flat market or a market that tends to go up and down, you need to understand what kind of price appreciation you're expecting to see over the period of time that you own the home. If you really need to protect yourself, which I think every investor should before signing on the dotted line, I would suggest only buying homes with equity. And I mean real equity, not, oh, it appraised for $200,000 and I'm buying it for $195,000. Isn't that a good deal? No, absolutely not. You're going to be wanting to buy property with 20 or 30% equity position so that you can really feel confident that you have value in the home and that you can afford to ride it out. Even more important when you're getting 90, 95, 100% financing, because you'll have a big debt load on the property. So don't get in over your head. Build slowly. Make sure you know what's going on a day-to-day basis with that property so you can maintain it well and the tenant doesn't get behind, the property doesn't get damaged. Those are other sort of unforeseen expenses that some new landlords encounter in the most unpleasant way when they have a problem tenant to deal with. If this is something that you need help with or that you'd like more coaching on, please feel free to contact us. We do offer some one-to-one and group coaching services if that's something that would be of help for you. Also, if you want to understand more about where your market is in terms of the real estate economic cycles, I encourage you to click the link below on this page to find out about market timing using some of the proven patterns and cycles of real estate to help you determine when to buy when the market is low and when to sell when the prices have peaked. So that's all for this lesson. I hope that real estate will work for you, but whether it will work in your area is another question. What I found is that I live where I want to live, which is near my family, and I invest where it makes sense, which is where properties cash flow and appreciate. Until next time, this is Emily Cressy, and thank you so much for joining me.